Fintech, beyond investments and into future technologies. If you thought fintech is limited to only investment opportunities, think again. It's an exciting time for the world of fintech. There are some innovative and emerging technologies and applications under the fintech umbrella that are solving a host of key problems in finance. If you've ever tried making any international payments or transfers through banks, you know the struggle is real. In some cases, it can take anywhere between 3 to 5 days for the transfers to go through and is extremely inefficient as it locks up the remittances for that period. This is because banks still use a legacy system called SWIFT to transfer money between international bank accounts. And mind you, this system is almost 50 years old. Cryptocurrencies are increasingly becoming integral to find solutions to replace SWIFT. RippleNet is a well-known crypto platform that banks are warming up to offer faster international payments to their clients. A great example of this is Axis Bank, which has been trying to break into this space from as far back as 2017. Another remarkable area, creating both opportunities and challenges for banks, is the evolution of open banking but around the UPI framework. UPI has a huge role in pushing the otherwise digital payments unsavvy Indian buyer into a more digital-first economy. Open Bank can be used to develop and distribute the financial products that banks offer today. Banks could begin offering their fixed deposit services on the UPI platform, allowing customers to pick and choose a bank and its fixed deposit service of their choice that solves their investment needs. Banks probably need to prepare to compete or partner with asset management service providers to push floating balances in savings account and investment products such as liquid funds. This has significant implications for the balance sheet of banks since it will lead to a reduction in customer deposits in their savings accounts. Another emerging space where technology is disrupting is in tripartite financial contracts, where blockchain-based technologies are being used to help banks manage risks better. For example, letters of credit guarantee involve 3 parties and is in an area where blockchain technology could be used to enhance security. A large bank in India recently lost $1.4 billion due to a failure of internal controls involving letters of credit or guarantee. If we want to avoid such scenarios in the future, then we need to consider more robust solutions that can help. This application of blockchain technology could also extend to other tripartite situations, such as education loans and loans for the construction of new building projects, among other things. We'd be sounding like a cliche if we say data science has become a key area for almost any business today, and more so for the finance and banking industry. An interesting application of fintech is the use of data science to manage and even optimize usage of regulatory capital by banks, especially considering the more stringent and demanding regulatory capital requirements arising out of Basel III regulations. Fintech can play a big role in asset management. The use of technology to manage demanding and complex regulatory requirements of Securities and Exchange Board of India or SEBI, spanning portfolio management, risk management, regulatory reporting, and expense management will ease up the process. There's an emerging class of optimization problems arising out of the various complex regulations being mandated by SEBI. While these haven't yet been well researched by the asset management industry in India, this is going to be of great interest to them soon, as it could lead to better management of funds. Let's look at an example of this. SEBI imposes stringent requirements to manage the redemption risk of large investors in open-ended mutual fund schemes. It requires funds to set aside as much as 40% of the invested money, in some cases from large investors in low-return liquid investments. On the other hand, regulatory demands for managing redemption risk for small-ticket investment under 1 crore rupees are much less demanding. But the sales and marketing expenses of such are significantly higher, adding a cost to the fund operator. This leads to an optimization problem where the fund needs to decide the optimal mix of large and small-ticket investors it needs to target to ensure that the overall returns of the fund and costs of marketing are both appropriately optimized. Fintech has found a strong footing, and dare we say, even a head start in India. But we think the best is yet to come. With technologies around finance evolving at a great pace, it sure is an exciting time for the fintech and finance industry at large.
Want more information? Visit us at www.herowired.com.